Okay, so this is top five high yielding stocks to buy before 2022, and I tag these winning strategies to stay ahead and beat the market with double-digit gains year on year. Now, the question is it possible? Can someone make money trading Nigerian stock? Is it possible? Like with what we've heard, all we've heard so far, with the whole share price fluctuating, are people actually making real money in this market? Is it possible? So I'll try my best to share success stories, some of the stocks I've picked, and then try to explain how you can actually trade Nigerian stocks and emerge winner year on year. In short, I'll perform your broker. A lot of us, in short, our exposure to the Nigerian stock market basically is to give our money to mutual funds. And I can tell you categorically that you can actually make more money than mutual funds, like earn more return, I mean, than your mutual funds. So rather than give your money to your equity mutual fund, which I'm not against, but then if you understand the strategy I'm going to share with you, you would actually make more money than your mutual funds. So let's continue. So this webinar is for those that want to. So let me share who this webinar is for so that you most likely look at it and check whether this is actually for me or not for you. So first, this webinar is actually for those that want a guaranteed return from stocks every year. Yes. See, no matter how bad the economy is, I always say this, no matter how bad the economy is, there will always be a sector that is benefiting from Nigerian stock markets. Very, very important. If you check this, if you go as far back as coronavirus 2020 that we can remember, when the government announced a lockdown and a lot of businesses were battered, the truth is certain sectors were benefiting. Certain sectors were benefiting. So from 2020 down to 2023, there are sectors that have been doing well. If you know how to position yourself, if you know how to channel funds from one sector to another. At the peak of the COVID, many of us invested in telecom. Many of us went to buy MTN shares, Airtel shares. We bought food stocks, and this company made a lot of money. In short, much were channeled to healthcare companies. Now, after coronavirus, what happened? The government lifted the lockdown. Some sectors that suffered during that COVID started open up again, especially consumer goods company, hotel, Guinness stock picked up. You see that most companies that were battered, oil stocks, did extremely well when government lifted the lockdown. And then CBN at that point devalued the naira multiple times. So you could see that as events unfolds, there would always be a sector that is benefiting. So the truth is, you can actually earn guaranteed return every year from Nigerian stock markets. I've been running a community for like 6 years plus. That's not when I started trading. I'm running a community for 6 years plus. And then people will ask me, how are you confident enough that you can actually tell people to go buy this stock? Like imagine almost 500 people depending on you. And then they are waiting for you to say, buy this stock. And then 80% of this time, this stock will always do well. Why? It's because I have mastered my craft. It's because I'm not a gambler in the market. I have a process. If you follow a particular process and you get an outcome, the truth is that if you want that outcome, you should follow the same process. So in the NSC market, I have actually mastered a process that has always generated more winning for me every year. And I'm going to share that with you. And when I share that, I'm not going to share theories. We will go to the market. I will show you stocks. And then I will combine all the stocks together and we'll see all the winning signals. Then we'll then use that to pick stocks for next year. And I'm also going to talk about the stocks I've been sharing since 2021, 2022, and what they all have in common. And then we would also look at 2023 winners. I will tell you the top 6 stocks in this 2023 that we are, and you'll be so surprised to see that all these top 2023 stocks, they actually have one thing in common, and I will show you that. So that's one thing that have actually helped me in this market. I'm a practical person. I'm not a stockbroker, but I've researched, I've understand what works in Nigerian markets. Now, second one, those that want to build a low risk and high yielding equity return. A lot of people will say stock is risky. If you put your money in stock, you will lose it. Let me tell you the truth. The truth is that your risk in the stock market is actually dependent on your level of knowledge in that market. If you have the right knowledge to trade stock, your risk will reduce significantly. So most people are actually dubbing stock market a high risk environment because they don't have knowledge. Number one, some of them don't even know whether they are trading or investing. That's a risk. You want to buy a stock. If I ask you a question, why did you buy Zenith Bank? I only need one answer. But most times people cannot respond. I've had opportunity to review portfolios. And then when I review portfolios, there are things I see. And then the question is, sir, why did you buy this stock? Some of them will tell me, oh, I just bought it because my broker recommended it. It's a wrong reason to buy a stock. So we'll say, I just bought it because it's a brand. No. Oh, I just bought it because I love the stock. That's emotion. You don't trade with emotion. Are you buying for trading or are you buying for investing? If you buy a stock for investing, what are you telling yourself? I'm saying that I am staying put on this company. Now, for people that have joined my community, I always share one very funny thing. And I say that because it stick into your memory. Trading in Nigerian market is like dating. Investing is like marriage. Now, if you want to marry someone, what do? Your head, you're saying, I want to stick with this person for a long time. In short, I want to stay with this person for the rest of my life. Do you just jump or pick a random person to marry? No. You will do your research. You would understand the person's personality. You would try to understand the person's parents, where the person is from. You will carry out so many research and then put them together. You then sit down and ask yourself, do I really want to marry this person with all this information I have at my disposal? That is marriage for you. If you put that into play with investing, that is exactly how investing works. When you want to invest in a company, you're going to carry out your research because investing is for a long time. You don't just jump into any random stock because you're marrying this stock. You're staying with this stock. I'm staying with GTB for a long time. Come rain, come sun. I'm staying with Zenith Bank for a long time. Why? Because Zenith has survived multiple economic uncertainties, multiple events. And then they are still standing strong. They're paying dividends. And why did I buy Zenith Bank? I bought Zenith Bank because the stable nature of that bank means they will continue to pay me dividends. So my essence of buying Zenith Bank is for cash flow, not for share price. So even if Zenith Bank shares dip to dip to one, I will buy more. Why? Because all the factors that have made me to buy Zenith Bank, they are still there. They have not changed. It's just emotion. Now, at the peak of COVID, Zenith Bank dipped to as low as, that was in 2020, to as low as 12 naira. A lot of people were selling out of panic. But did it stop us from withdrawing from Zenith Bank? No. Did it stop us from going to Zenith Bank to withdraw? Many of us were still using Zenith Bank mobile app. We were still withdrawing, we were still carrying out a normal banking transaction. And then some of us snapped Zenith Bank at 12 naira. Today, Zenith Bank is selling for 35 naira. But some of us are still holding. Why? Because we consider Zenith Bank in an investment, not trading. So when you buy a stock for trading and investing, you need to know the difference. Now, if you buy a stock for investment and the price of the stock crash, you should be happy. You know why? Because you didn't buy that stock for share price appreciation. You bought that stock for cash flow. And where does your cash flow comes from? It comes from dividend. And how do you make money from dividend when you buy more units of that company? So meaning that if the share price crashes, you should jump on that stock to buy more, because the more units you buy, the more the money you're going to collect as dividend at the end of the year. That is investing. Now, for trading, it's like dating. Dating, you're meeting someone for the first time. Are you going to ask for the person's parents or try to know where the person is from? No. You're only going to stick with the person's personality at that point, what you see. And then you know very well that there's the tendency that you're going to stay with this person for the rest of your life is not there. It's just for a short time. It's trading for you. When you trade a stock, the type of analysis you carry out is totally different from investing. In trading, you just want to be sure that this stock is good for that time. That means in trading, timing is key. Timing is very, very important. So a lot of times when I see people buy a stock, they use the mindset of investor to trade, and that's wrong. Your broker will send you a stock and say, buy this stock because PE ratio is this kind of cash flow. They are using investment model to recommend a stock for trading. That's wrong. So they need to know what type of analysis should I carry out. So the analysis you carry out when you trade a stock is totally different. In trading, how do you make money? You make money when you buy low and sell high, right? And what makes a share price to go up is when there is demand for that stock than supply. What makes share price to come down is when there is supply than demand. That means in trading, you should be interested in demand and supply. You should ask yourself, is the demand at this point going to increase more than supply? Yes, buy, because you know in the next 3-4 months this share price is going to. So you are not interested in the financial position of the company much like that. What you are interested in trading more is demand and supply, because you know that's going to drive the price in the short term. So you can see the difference. Now, does it mean fundamental analysis is not good for trader? No. The simple analogy, the simple summary is trading is 10% fundamentals and 90% technical. Technical is when you start to analyze demand and supply. While investing is 90% fundamental and 10% fundamental. So when you understand this thing, your risk is reduced automatically in the market, because at this point, you are trading with a near accurate information. And the one good thing about trading is that when you buy a stock, once the price of the stock dips below your risk level, you sell off. But a lot of times, when you people buy a stock for trading, the moment the stock dips, what do? They start hoping. You don't trade stock with hope. You don't say, oh, I think this share price will reverse. And then you watch the share price go down, go down. This is why a lot of people have lost money. In short, the reason many people lost money during 2008 market crash. Let me summarize that for you. The reason you lost money in 2008 market crash is that those shares you bought, majority of those shares, you bought them without knowing whether you're trading them or investing in them. Because if you have bought those shares for investing and their price has crashed up till now, my question to you, did Zenith Bank, GT Bank, or UBA, did they stop paying dividends? 2008 market crash is just for 1 or 2 years, and since then they've been paying. So for an investor, what do? You would have snapped up a lot of these shares at a low price. But then for trading, the moment the share price dipped by a certain percentage, which I share with them, you quickly sell off. So when you understand the business of trading and investing, you would know when to exit a company. When do you exit a company as an investor? You will exit a company the moment you get the sign that this company will no longer pay you dividends. That means when they are not financially stable to pay their share, you quickly exit that company. When do you exit a company as a trader? You exit when it falls below certain price. They are not safe. So most people, when they buy a stock and the share price dips, they are panicking. And then my question is, did you buy for trading and investing? The funniest thing that they will tell me, I don't even know. That means you are even gambling. You're already a gambler in the stock market. So I want to share the essence of this webinar basically is that I'm going to show you how to build a low risk and high yielding equity portfolio. Yes, stock market is actually high yielding if you know what you're doing. Look at the return on the Nigerian stock market this year. It's been impressive. Because why? There are so many things. A lot of things have been responsible for that rally. At the beginning of the year, look at what happened. There was naira scarcity. And did you know the naira scarcity actually contributed to increase the mobile banking transaction? That's a plus for banking sector. Some other times, what happened? The government removed fuel subsidy. Oil stocks picked up. That's also a plus for oil sector. But some other time, exchange rate was devalued. And then it was a plus for other sectors. Again, the banks benefited. And then other sectors that were dependent on export revenue, they benefited. And other companies that had foreign exposure. So you need to know how to position yourself in sectors that are benefiting from trends. And then the third one, this is for people that want to get in early on the next winning stocks. The truth is, again, if you want to make money in the market, you need to learn how to get in early. One of the things I'm going to share with you right here in this webinar is how to stop trading with newspaper headline. Many of us, when we read today's news or tomorrow's news that, oh, Bank A is doing this, we start buying the company shares. The truth is, most of the news you see on paper, they're actually old news. Smart investors, insiders have already traded those news before they even come online, before they are online, before they are on media. So there are patterns that you should learn to track, you should learn to watch, that will tell you that something is happening in that company. There was a stock I traded, CWG, for instance. When I saw the move on CWG, there was no breaking news. In short, I'm sure many of us have been in a position where you will watch a stock rise 10%, 10%, 10%, 10%, and you'll be asking, what is responsible for this stock? What is happening? You don't know. There is one thing in Nigerian markets, which I think is actually driven more by corruption, number one, and then there's no rule to guide that. I've seen stocks in Nigerian market tends to rise first before we hear the news behind that rally. I've seen that most of the times. You watch a stock go up back to back for 1 week or 2 weeks, and then once the stock is at the top, you then begin to find out why the stock was rallying. Should you trade that stock at that point? It's already at the top. And many of us, out of FOMO, fear of missing out, want to jump on that stock, and then at the end of the day, you buy at the top of the market. Besides, when you're even buying at that stock, others are using you to take profit. The worst thing that can ever happen to you in the Nigerian stock market is for others to use you to take profit. What does that mean? As you are entering, someone else is exiting. So they are collecting your money to exit the market. When it's time for you to exit, who are you going to sell to? Nobody. At the end of the day, one of these two things will happen. Is either you sell at a lower price for you to take your money out, or you're stuck because nobody's willing to buy that stock. At some point, you hear that the stock is on full offer. Nobody's buying. Why? Because you buy at the top of the market. And when you buy at the top of the market, it's like you going to a party. At the end of the party, they finish sharing the rice, everybody's about to go home, and then you are coming. What are you coming to do when the party is over? So here you're going to learn how to get in on a stock early. In short, this is the secret to most of my big winning stocks every year. I try to get in on all my stocks at most December before the new year. Most of the times I've had webinar like this on stocks to buy for the new year is either in November, like last year in 2022, it was in November. This year, December. So max November, December, I want to start building position on next year's winner, and I will tell you why. And then the fourth one, for those that want to get rich slowly but sustainably, stock market is not a get rich scheme. No, it's not a place where you are bringing your money and you want to earn 100% return overnight. Yes, it's possible for some stocks to do 100%, but here you're coming in for consistency. The stock market is a business. It's a business. If you can get rich slowly but sustainably, the key point is sustainably, meaning that you're sure that every year your portfolio will continue to go up year on year, as long as you're doing the right thing, as long as you're not gambling. The worst thing that can ever happen to anybody in the market is for you to buy a stock, you made money from the stock, but you didn't know what you did to pick that stock. Now, when it's time for you to pick another stock, you're not gambling. Maybe you just jump on one stock out of luck, and then you made money, and then the next thing you're trying to buy the no. But it makes more sense when you pick a stock and that stock delivers good return, and you look back and say, oh, I actually picked this stock because it did this process, because I saw this pattern. Meaning that if that pattern shows up on another stock, it increases your confidence in the market. Even if the stock price dips, you are going to buy more. Even if the stock price dips, you're going to buy more. Funny enough, I've been telling a few people that are close to me that the next year winner, 2024 stock winner, are actually in top losers list. I shared it before in the group. This is how funny the stock market is. Many of us are rushing to buy top gainer, top gainer, top gainer. The truth is, top gainers have already rallied so high. If you go jump on 2023 winners and think that they will be 2024, you're going to lose a lot. The possibility of you losing is high because these ones have already got their downside risk is very high because they're already at the top of the market. Yes, some of them might go up, some of them might be stable, but that kind of return, they may not post that kind of return again. And I'll tell you where to find the next return in the market. Now, number 5, for those that want to add stocks to their existing portfolio, maybe you have other investments. You have a real estate, you have a business, and then you're thinking of, okay, let me see if I can try stock. Let me join this webinar and see the possibility of trying out the stock market once more because I've lost a lot of money. Maybe there were things I didn't know then about stock that I'm beginning to find out would help me position my portfolio, because a lot of people in my community, when we share ideas and we discuss, we talk, there seems to be this kind of knowledge coming back. The community is hot because everybody's sharing knowledge and we are learning from one another. Someone will come on board and share his mistake. Other person would respond and tell the person, oh, this was what I did. So we're learning, and there's just like a community. Because when you join a community, you're actually leveraging community intelligence. There are information we might not be privy to, but because we are a member of a community, we would most likely be getting information from them. Let me share one instance. I talked about Owando at some point. I would have bought Owando earlier, but because of the news of the listing, I stayed back. In short, Owando was a stock I've been talking about 2 or 3 years ago. In short, I have one of my analysis on Owando on my YouTube where I was so emphatic on Owando doing well. Now, many people will come to my DM like, why are you talking about Owando? Why is a bad company? I know they are investor. Because one funny thing about the market is that you can be with someone in the stock market about a stock, and both of you will be right. Yes. You'll be arguing. You'll be telling the person this stock will go up. The same person will be telling you that the stock will come down, and both parties will be right. Do you know where the difference is coming from? It's because both of them, they have different investment lifestyle. So the person who is an investor, he might look at the stock and think this stock does not meet my checklist for investment for now. So if I buy it, there's a risk that I may lose money in the long run. He is right. For you as a trader, you're looking at that same stock and you say, this stock is hot right now. In the next 2 to 3 months, this stock might rally high. And let me quickly jump in and make money. The first person is not wrong. You are not wrong. What is the difference is your investment lifestyle, your trading objective. Why are you buying? He's analyzing from the point of an investor. So when you are arguing, when you are taking feedbacks, opinion, ideas, bias from other people, try to understand who they are in that market or what their position is. Are they talking from an investment perspective or trading perspective? The worst mistake that I've seen people fall into, the worst trap, is for them to take trading advice from an investor. Someone has analyzed a stock as an investor. He is telling you what the company share price will do in the next 5 years. And you are jumping in, thinking that you will make money from that company in the next 2 months. The gap is wide. So when you're taking an advice from someone, always ask this person, are you a trader or an investor? In our community, there are times we'll be arguing about a company, and eventually we will settle it. How? Because we'll get to find out that, oh, this person is actually an investor, so he is right from his investment perspective. Oh, I'm a trader and I'm right from my own trading perspective. So we're not arguing to look for who is right or who is wrong. We're actually arguing to find out from what perspective are you talking. Are you a trader? So if you talk as a trader, you are right. Especially when you put the metrics that you need to be a trader. So it's important you understand this information that I'm sharing so that you open your mind to the things that I'm going to share with you. Then number 6, for people that want to learn the business of stock trading and also see how ordinary Nigerians like you are making real money outside Ponzi schemes. The stock market is not a Ponzi scheme. The stock market is not like a casino where you just jump in and then pick one stock, mini, mini, money more, and then think that the stock would. No. The stock market is a market where you should see it as a business. Remember, you are investing in companies, real companies. So even if they call it stock trading, or they call you a stock trader, is not different from a shareholder. So stock, shares, equity, they are the same. So see it like you are part of a business. You're buying into a real business. So before you buy into a new business, you need to take your time to understand what is moving. What are the key factors behind that company's share price? Why is that company's share price doing extremely well? So these are the things you need to look at. So if this particular feature list that I shared appeals to you, then you can still be part of this webinar. Let's move on. Now, at the end of the webinar, I'm also going to share how to join our trading and investment community for annual subscription if you want to. If you find this webinar interesting, we'll also talk about that. Now, before we move on, let me share a brief information about me so that you will know who you're talking to. So here, I have a platform called, I just launched a new platform. I call it Coachocom. So this is my new platform. And then, okay, so this is my new platform. I just launched the platform recently. So, and the rest of this platform basically is for people that want to learn how to trade stock and then they want one-on-one coaching with me. So here you can check from your end. I'm not going to spend time here. And then I am a knowledge person. When people join my community, I tell them one thing. I said, you are not in this community to fish or you're just waiting to be spoon-fed. No. I run a knowledge-driven community first before a money-making community. So when you have that notion that you're coming to our community to make money, you might miss it. But when you come to our community as someone who is seeking knowledge, because I've seen the knowledge gap in Nigerian markets, a lot of people do not actually understand what it takes to be a profitable stock trader or a successful investor. So I am approaching this industry as a knowledge coach, as someone who is coming to impart knowledge. So here I have, you can see some my video courses. I'm going to share how to access these video courses with you. You can see right here, these are all video courses that you can actually access on my platform. We'll come down to this place later just to share this. And then let me share some brief information about me. First one is that I'm actually the brain behind Glofolio. Glofolio means global portfolio. So Glofolio is actually a social community for stock traders, Nigerian stock traders, sorry, and then investors looking to access profitable investment opportunities in local and international financial markets. So I am not limited to Nigerian markets. I also trade US stocks. So we have two communities. We have Nigerian stocks and then we have US stocks. They are separate groups. So I'm a brain behind Glofolio, sorry, which is global portfolio. And then I own Coachocom and then an online learning and coaching platform. Yes, an online learning. So what I'm doing right here is everything I know about stocks, trading, investment, and all that, I put them together as a video course and put it on the platform so that it's easier because I cannot attend to everybody at the same time. So I had to build this platform to make it easier for people to access knowledge from me anytime they want, which is more convenient. And then the third one, I hold certifications in accounting and finance. So my background basically is in accounting and finance. And then, like I said, I trade Nigerian stocks, I trade US listed stocks, and also ETF. Now, I've been running community for 6 years. Yes, I've been running community for 6 good years plus. So that means I am not a novice. I'm not just creating this WhatsApp group that I have or whatever group you think I own for the first time. I've been running communities for a long time and I understand the process. And I'm glad I have responsible people in my community, meaning that my community is not one where people share different information or you just come. No, we share reasonable, we share from information that is useful to other. In short, everything we share in the community are related to stock markets. When there's breaking news, I'm glad people are quick to come to our community to share breaking news. And then recently, my newest project, I just launched a mobile app. It's called Glofolio mobile app. So, but right now, it's still on Play Store. We are working on getting iPhone to Apple to approve it. I don't know. The procedure protocols are just complex, but I'm glad we're moving forward. So we're waiting for people to approve the APK version of that portfolio app so that I can move everybody. Right now, we are still on WhatsApp, but then I've migrated database to the app. Then we are juggling between the app and then the WhatsApp group because of iPhone users. But if you go to Play Store and you search Glofolio, you'll find the app. So it's available to Android users and all that. But we're still working to improve on that. In that community, in the community, that's the app community, we have a chat group. The same way you have WhatsApp chat group, we have a chat group. Now, the reason I had to invest in that community was because I wasn't comfortable with WhatsApp. There were certain limitations of running a WhatsApp group. Number one, because we belong to a group doesn't mean you can just come to my DM and post anything or try to scam me, blah, blah, blah. So, you know, when there's money issue, whenever you have people talking about money, there'll always be scammer. So I have to take time to invest in that app, but then we're moving forward to ensure that the app is up and running. So I think that's just a brief information about me. So let's start this webinar properly. And how do I want to start this webinar? I want to start this webinar by talking to you about the top performing stocks in 2023. Yes, like I told you, I'm going to be practical. This is going to be not going to be theory. You would probably see the information as something you can relate with. First one, we're looking at top Nigerian stocks in 2023. Yes, we've not ended 2023. We're almost at the last months. But then it's important we look at the top performing stocks. And this is where we're going to start this webinar properly. Now, look at the top performing stocks. First one, we have Champs. Champs has delivered 800%. Second, we have MRS Oil. MRS Oil has delivered 679%. We have Transcorp Hotel. Transcorp Hotel has delivered 610%. We have CWG. CWG has delivered 548%. I'm talking about year to date. That means performance from January 1st up to Friday, not the whole of 2023, because the market still has some days to end the year. So this is January to last Friday. Then we have Japo. Japo has delivered 485%. We have Northern Nigerian Flour Mill. It has delivered 485%. We have Transcorp itself, 482, and then we have FTN Cocoa, 465. Interesting. Look at the kind of performance that some stocks are posting in Nigerian market. The same stock market people are saying is not good, blah, blah, blah. You can see here. And interestingly, I have 3 of my stocks on these top performing stocks. I have CWG that I've recommended to people that have been in my community. CWG was selling for 1.16 when I recommended CWG, and I was so emphatic. I told them CWG would clock 5 naira, and then CWG blast above 5 naira, and it touched 8 naira. So CWG is one of them. I also recommended Japo. The moment I recommended Japo, Japo went on full bid back to back for close to 2 to 3 weeks or thereabout. But I've sold them. And then the risk, this one I'm talking about now, in short, some members in my community are still holding Northern Nigerian Flour Mill. They don't want to sell. At some point, I will tell them, sell. They will tell me I'm on my own. Northern Nigerian Flour Mill is the latest one that I've recommended in my community. Please, like I said, I want to be practical. I don't want to make it look like I'm trying to overrate myself and all that. Please, if you are in this webinar and you bought Northern Nigerian Flour Mill existing community, please kindly confirm your percentage return in the chat section. Please. If you bought Northern Nigerian Flour Mill, please confirm in the chat section and you're in the community, please. If you bought Northern Nigerian Flour Mill, thank you. Thank you. Thank you. You can see, so if you are joining us for the first time, You can see the return members are posting on the WhatsApp group. So it's not like I'm trying to over exaggerate and make it look like I'm trying to. You can see the returns members are posting on Northern Nigeria Flour Mill. You can see the minimum here I've seen so far is almost 100%. You can see right now, although some sold for 25%. Now, it doesn't mean that whenever we buy a stock, we aim at 100%. I always tell them, once you are 15, 20% up, please sell. But some of them, they have this faith that I'm still even it now makes it look like I'm even learning from my own members. You understand? So you can see the return they are posting. Some of them have still not sold. And then why are members still holding Northern Nigerian Flour Mill? Let me share some things with you. I want to share how that our community is a knowledge-based community. You know, there was a time I went to I want to use everyday things that happen every day, like you can relate to it. I went to the bakery to buy bread, and then the baker told me that the price of this bread is going to increase by 50%. I think specifically is sardine bread. So I buy for 1,000 naira. So she said it was going to increase to 1,002 or 1,005. I said, why? She said, because flour is expensive. And then they don't have any choice. They can't be running a business that's at loss. Now, when she told me that, as someone that can relate with the market, in my head, I'm like, that means there's actually going to be opportunity in flour meat sector. But then I don't just jump into any stock. So when I carried out a research on that sector, Northern Nigerian Flour Mill was the best. In short, if you look at the performance of Northern Nigerian Flour Mill, it was almost 90%. Go and check their Q3 results back to back. Another thing, Northern Nigerian Flour Mill is actually enjoying monopoly in the north. In the north. So you would probably ask, why is Flour Mill Nigeria, why is Honeywell not doing the same number? Sometimes you need to look at the best, not just the best. You need to look at the one that is actually positioned. That's where demand and supply comes in. So when I spotted Northern Nigerian Flour Mill, I told them, in short, I specifically told them in the community that this is an explosive stock. You can see some of them are still posting. This is an explosive stock. I told them specifically that this is another Nigerian Flour Mill was selling for 12 naira, 13 naira when I posted it today. You can see the return on Northern Nigerian Flour Mill. In short, there are other stocks that I can mention. One of them is NASCON. NASCON at the beginning of this year was one of the tomato pastry companies. And then what happened? Tomato was scarce. When tomato got scarce, I looked at it and said there must be a sector that is benefiting from this particular scarcity. I did my search, and then what was that stock? It was NASCON. NASCON at the beginning of this year was selling for 10 naira. You can see here. You can see where NASCON is selling over 54 naira. So what am I saying in essence? Sometimes the simple information at your disposal, they are actually enough for you to know the stock to buy. The simple information at your disposal. Sometimes I even say one funny thing again. I said for ladies that actually trade stock, they actually have more access to more information on stock trading than guys. How? Because you go to the market every day. So you can even tell which product is actually more expensive now compared to what it was selling last year. And then all you need to do is to ask yourself which company is actually selling this product. And then take your time to do the simple fundamental analysis and you are in. Because stock market basically is all about investing in business. And what is business? Business is all about buying and selling. So when you go to the market and you spot a product that is actually rising, and funny enough, if it's a product that is considered inelastic, meaning it's a product you cannot do without, that means this company has huge pricing power. If they increase their price tomorrow, you don't have any option. If bakers continue to increase the price of bread, people will continue to buy bread. These guys, they are actually in a sector that I consider inelastic. So that means they command high pricing power. Just another company again is NACO. Look at what NACO has done. So when you look at share price, don't just jump into the company's share because you feel the price is going up. Understand the catalyst behind that share price rally. So we have Transcorp and then FTN Cocoa. Now, can you see all this stuff? I had to pick 1, 2, 3, 4, 5, 6, 7, 8. 8 companies. Let's look at what all these 8 companies have in common. These are top performing stocks for 2023. So I didn't show you last year or 2019. It's something, at least we are still in 2023, so you can relate. At the end of this webinar, you can go to your own research to confirm everything that I showed you. Now, what does each of these companies have in common? Like I'm going to share with you right now. Now, some interesting fact about these stocks. When I say these stocks, I'm referring to these top performing stocks that you're seeing in 2023. You may be surprised to know that sorry, you may be surprised to know that these stocks were all at the bottom for some years. And I'm going to show you each of the stocks. All these stocks you're seeing right here, they were at the bottom for some years. First, let's start with Champs. Champs, before the big rally, can you see Champs was at the bottom? First one. Look at MRS Oil. MRS Oil was actually at the bottom. Can you see again? Look at the year. This December into 2023. So you can see that the spike actually started at the beginning. So they were already at the bottom. That's second one. Look at Transcorp Hotel. This is Transcorp. This is Transcorp. Transcorp is also there. Can you see? Transcorp was actually at the bottom for some while before it picked up. So let's look at Transcorp Hotel too. This is Transcorp Hotel. Yes. Can you see? This is Transcorp Hotel. This is 2023. You can see the date. Like I said, whatever I'm going to show you is subject to verification. So you can see Transcorp was actually at the bottom before it peaked. Let's continue. Look at CWG. CWG, Computer Warehouse Group. Can you see? Computer Warehouse Group was actually at the bottom before it picked up. Look at Japan. Japan stocks was actually at the bottom before it picked up. Look at when Japan picked up, May 2023. Can you see right here? Now, look at NNFM, Northern Nigerian Flour Mill. Can you see here? Northern Nigerian Flour Mill was actually at the bottom before it picked up. Look at when it picked up. Can you see? So let's continue. Look at, I've talked about Transcorp, FTN Cocoa. Can you see again? FTN Cocoa was actually at the bottom before it picked up. Now, like I said before, I like to use research that you can relate with. Top 6, which means that even if you do top 7, top 8, top 9, top 10, most likely, what does that tell you? It means that 90% of top 10 performing companies in Nigerian markets were actually at the bottom. This is a research that I've been just discovered this year. It's a research that I've discovered a long time ago. That's why when I recommend stock, I don't argue. I'm not the best stock trader in Nigeria, yes. But then I like to work with empirical research, practical research you can relate with. I'm not a theoretical person. I will show you practical, something you can take back, do your independent verification, tear it down, come back to me and tell me it's wrong. And if you tell me and I find out that it's wrong, I will accept. But then this is a research that I've carried out that is working for me year on year. So look at the first one. These stocks were all at the bottom for some years. Number 2, these stocks weren't top gainer in the previous years. Can you see that? In 2022, they were not top gainers. So if you're someone who is used to jumping on top gainers for the year, thinking they will continue to rally the next year, you are setting yourself up for loss. As you're buying that stock, they are using it to take profit. What am I telling you? All the stocks you're seeing here, don't expect them to be top gainer for 2024. I know many of you would have started jumping on them. Remember, I am talking to you as a trader. This webinar is designed for traders, not investors. Please take note, because some of you might be saying, are you saying you shouldn't buy the stock? If you're an investor, I've not carried out research on this stock as an investor. This is a trader. So I'm telling you that these stocks may not be top performing in 2024. May. I'm not saying will not. So there's high tendency that they may not be top performing, but you can see all that they have in common. They were not top gainers in 2022. And then these stocks were completely ignored before they started picking up. No media hype. There was a slide I borrowed from my newest course. And one of the benefits I want to give to everybody at the end of this webinar is that if you get that course in 48 hours, I'm giving you 64%, 65% discount. I'll give you the coupon code openly right here. There are 2 slides that I borrowed from that course, and I will discuss it right here. They were completely ignored. Don't follow the media. That's the wrongest thing. Even in our US group, I tell them, what you see all this CNBC, Bloomberg, Business Day, I like them. I listen to them. But you know what? They are noisy. There are times these people, they pay media to help them influence a stock. I'm not telling you what I think. I have actually received invitations before, multiple times. Because a lot of people have seen that, oh, he's good at stock. Whenever I say people should buy stock A, they will rush to buy. Then they will say, can you help us talk about this stock in your community? You know what I tell them? I'll tell them, please send me the financial statement of the company. Once I analyze the financial statement and it doesn't meet my criteria, I don't go there. Why? Because the people in my community, I've trained some of them. Some of them will even come back to me and say, this stock you're recommending, look at what you said in your video. So, in short, from the fact that I don't like it, from the fact that it's very bad, how can I go recommend stock to people because I want to collect money? It's bad. I don't do that. So it's just to open your eye to the fact that some analysis you see on media, they are sponsored posts, they are sponsored hype. Some of them will call the CFO, the CEO. You see them, and there's nobody that will talk bad about this company. They'll start telling you some good projections, sweet mouthing the company, and then you will rush to buy, not knowing it's media hype. You're the only person listening to that company. There are so many people that are listening to the same company. So when you rush to buy, everybody will be rushing to buy because of this. There's a media. Whenever you see the media start talking about a stock, do you know what? Do you know what you should do? Sell. It's time to sell that stock. Sometimes the institutional investors, mutual fund managers, they actually use the media to generate liquidity for themselves because they know when the media talks about a stock, people want to buy, and that's when you should be selling. So when media start picking some of these stocks and top gainers, know that the smart ones are already exiting the markets. The smart ones. So you need to know when you need to think like an institutional investor. Even though you are coming to the market with small money, try to be smart and know when the market is being manipulated. When media is hyping a stock, the big boys are leaving the market. Don't jump in. If you jump in to buy, this stock might be going up. There is something we call fear of missing out. Fear of missing out is when a stock is going up and you don't want to miss out. There is another thing we call that one. I called it FOLMO, FOLMO, fear of losing money. That one is when the stock is going down and you are scared of selling because you don't want to lose money. Can you see? FOMO is when the stock is rising, you don't want to miss out. FOLMO, fear of losing money, is when the stock is going down and you don't want to sell. So that's the third one. The fourth one, these stocks broke out into year high before the bigger rally. These stocks broke out into year high before the bigger rally. So if you look at each of these stocks, before the bigger rally, they broke out into year high. There's one of the course that I taught some members in my community. That's where I picked some stocks like CW, how to be able to spot explosive stocks. And I showed them some metric you need to watch out for, some certain sign that this stock is about to break out. And then how that those metrics can tell you, even if there's no news. One thing I've mastered in Nigerian market is that I can trade a stock without no news. So people will ask, what is responsible for this? There are patterns I will see in the market. I will be 99% sure that there is something happening in this company that is yet to be posted on the media. Insiders are buying. When I spotted CWG, in short, there was even a student that I coached, that I mentored, that even told me that he worked with CWG and that CWG actually released a software that is being adopted by all the banks. That's why the share price was rallying higher. Was it on media? No, just an insider information. But then I've already sold the stock. That was when I heard that, because I knew that there must be something responsible. So you need to learn how to spot certain stock move, even when there is no news, because there is no move without a catalyst. There is no known move with that. There must be something responsible. But the Nigerian market is so corrupt to the fact that you may not know why until people have finished buying that stock. And then when you jump in to buy, it's already late. And then the other one is that only traders that held these stocks from the bottom made most money from capital appreciation. If you look at all these stocks, the people that actually made most money from these stocks are people that held them from the bottom, not people that bought them at the top. Because you saw that Japan is up by 485. Tomorrow, you're going to place order for Japan. Don't even try that. You're setting yourself up for a loss. I'm sure many of us can relate with all this information. I'm sure I'm disrupting some of our ideas about this market. People that have made money from this stock are people that bought them early. So leave these ones. The party is over, or in short, they're already at the end of their party. It doesn't mean the share price will not go up. Definitely it will go up. There'll be fluctuations. Doesn't mean the stock price will come down in 2024. No. But the possibilities that they will become top gainer in 2024 is very lean, except there's one breaking news that will spur another growth again. But you may not find the top gainer from this list. So the next one, they are not, sorry. Yes, okay. They may not post, sorry, they may not post the same monstrous growth. They may not post the same monstrous growth next year. At least 80% chance that they will dip or dump on profit taking. So all the stocks you're seeing here, they may not post the same growth next year. So from my own analysis, they are not parts of 2024 top performing stocks. So if you think that I'm going to select my top performing stock from here, no, no, no. I've shared all that they have in common. You can spot, and I'm sure you're following. So please, if you're following all that I've shared so far, kindly type, I'm following, I'm following, I'm following. Please, I want to be sure that you're following my analysis. If you're following everything I've shared so far, up to this extent, please type, I'm following, I'm following, I'm following. Thank you, thank you, thank you, thank you, thank you. I like the feedback. So here you can see that we use recent winner. So I didn't go back to pick random stocks, and I showed you all that they have in common. Then let me share some of my previous top winning stocks, and we'll then show you what they all have in common. Now, look at Honeywell. Honeywell was one of my top winning stocks in 2021. In 2021, I recommended Honeywell. This is Honeywell stock. Around this period, in 2021, you can see Honeywell spiked from 1 to reach a high of 4 naira. Now, go back to the same factor, interesting fact, emerged from the bottom. Can you see that? Honeywell actually emerged from the bottom. Now, in 2022, I posted Guinness. In 2022, I talked about Guinness. What happened? Guinness did the same thing. Guinness emerged from the bottom, touched a high of 90 to 100. What does Guinness have in common with Honeywell? Emerged from the bottom. And then compare this move with top 6 gainer for 2023 so far, emerged from the bottom. You can see that. I also posted PZ. Look at the signs too. PZ emerged from the bottom. You can see here, PZ emerged from the bottom. The same model. So I'm sure with what I'm sharing with you, some of us might be having an idea that, oh, that means the next winning stock for 2024 should be emerging from the bottom. You are right. We'll get there. But here, I'm just trying to show you researched moves, researched pattern that you should pay attention to if you want to create wealth, if you want to make the real money in the Nigerian market. So that you do stop gambling, stop jumping from one stock to another, stop buying the stocks, your broker. See, your broker is only using you to make money, and you only make money when you buy and sell. He makes money from commission. That's what they call him, stock broker. He's there to act as an intermediary. Not all brokers are financial advisor. I'm saying this categorically. They are not the same. So then we have eTransact. eTransact was one stock I didn't shout about. I will share a link to where you can watch my 2022 stock pick, and then you'll be able to see how the stock performed. This is eTransact too. You can see a match from the bottom. This is eTransact was actually one of the 2022 or 2023 stocks I mentioned. So what does each of these companies have in common? You can see they all emerged from the bottom before they became winner. They were once ignored by the media. Can you see how I'm repeating that again? They were once ignored by the media. And then the third one, they actually spiked on one of the 6 catalysts I'll be talking about. Now, each of these companies that I've mentioned so far, from Honeywell, Guinness, PZ, eTransact, up to Charms, MRS Oil, Transport Hotel, CWG, Japo, all of them. You see all these stocks? They actually spiked on one of the 6 catalysts that I'm going to share with you right now. Nothing happens in vacuum. Nothing ever happens in vacuum. There must be a catalyst. Like I told you before, you may not find a catalyst on newspaper. You may not know why, but there must be something behind that rally. And the next slide I'm going to share with you, I actually picked them from my newest course, which I call the one chart pattern. And I'm going to share that 2 slides with you right now. This is the newest course that I have. Like I said before, I'm going to give you access to this course for 65% off in 48 hours if you're able to get them I'll share the coupon code later. But the next two slides I'm going to share with you, they are actually from this particular course that I have, right? This is my newest course on my platform right now. So what is that catalyst we're going to talk about? Let's look at it. Understanding catalysts behind stock move. Look at these 6 catalysts I'm going to share with you. One of them would always be responsible for the spike on all the stocks that I've shared with you so far, and the next stock that I will share with you, and even the ones I didn't share with you, the spike that will happen in 2024, one of these catalysts will be responsible for that. I picked this slide from this particular video course. This is a video course. First one, want to share 6 catalysts to watch. What are the things that makes the share price to spike? Many of us are so limited. We are so myopic to limit ourselves to fundamentals, financial statements. So let me tell you why. First one is financials, which we all know. When there's significant growth in sales revenue, profit, and cash flow that beats, look at the keyword, that beats analyst expectation. If analysts are projecting that First Bank, look at First Bank. First Bank is going to post 100 billion naira revenue. And eventually First Bank posted 300 billion. It's a huge beat because the share price of First Bank is actually reflecting the 100 billion expectation. And suddenly we saw the actual result, which is 300 billion. What do you expect? It will spike. So one of the things that makes share price to spike is when the financials beat. Remember, the key word is beat, because if the financials are aligned with analyst expectation, nothing will happen because the price is already reflecting what they're expecting. No surprise. So one way to put this is surprise. We call it any surprise. If you're in the US market, if you trade US stock, I'm sure you'll be familiar with any surprise. If you watch CNBC, when they announce stock earnings release, you will see earnings actual versus expectation. You will then see surprise. Surprise is the difference between actual and expectation. If actual is higher than expectation, we call it positive surprise. But if actual is lower than expectation, we call it negative surprise. So that is one of the things that makes share price to spike. Surprise. So one of the stocks you might have seen me mention right here might be surprise. Number 2, new management. When a company hires an experienced founder, CEO, or key personnel, maybe because they feel this person has a track record. I use one analogy. There was this guy, I can't remember his name. He works with First Bank. Now, each time First Bank releases their quarterly results or trading results, I always look forward to First Bank trading income because of that guy. I'm trying to call his name. Because First Bank trading income is always like massive. And where's the money coming from? Bonds, equities, like trading financial instruments. Now, the moment I read on Business Day that guy has left left Zenith Bank to First Bank, I saw the effect on First Bank shares that month. First Bank shares started rallying higher. And then you'll be wondering, why? Why is First Bank shares picking up? You don't know. And there's a key personnel that has joined the investment banking team of First Bank. Because with that guy's track record in Zenith Bank, he's going to do well. Guess where that guy is right now? JP Morgan. JP Morgan Chase has picked that guy. That was the last time I heard about him. They picked him from First Bank because his track record when it comes to trading income is massive. The guy is so good in bond trading of financial instruments. Like, Zenith Bank can report 50 to 60% growth in trading income because of that guy. I'll try to get the guy's name. So when there's a new hire like this, expect the share price to spike because shareholders are optimistic. They are positive because this person is coming in with experience. So when you see new management and you read the track record, it's coming with wealth of experience. So sometimes when you want to invest in a company, try to understand the founder. Who is the founder? Try to read the CV of the management. Don't limit yourself to financial statements. When they have experience, it can actually turn the fortune of the company around. They are coming in with wealth of experience because they have track record. Maybe they've helped to turn a loss-making company into a profitable company. And now they're bringing that experience into a new company. Expect the share price to react. Now, the third one is corporate restructuring. Corporate restructuring is also key. When a company is selling its asset, especially loss-making units, you've seen so many times when some company, look at USCN. When USCN sold its loss-making units, we saw the effect, the spin-off of UPDC. So you can see that when the company restructure, one of the companies that is going through restructuring right now is Unilever. You see, Unilever is restructuring. In short, they stopped their, I think, their skin and healthcare units. When the company is restructuring like that, pay attention. Pay attention. Don't just read the news and ignore it. Because a company will most likely restructure to profit. They will also want to restructure to create value for shareholders. So pay attention to those kind of news. Corporate restructuring can also actually help a stock to move. Then we have new products or new markets. When a company releases new products, generally disruptive products, that's going to turn the market, like it's disrupting the market completely. And you know, this product will help move the company higher. It will also help the share price to spike. Can you see the catalyst I'm mentioning right now? Government policies, government circular, new bills, new laws, new announcements. When government impose restrictions on certain items that they cannot access FX, especially palm oil. We saw the effects on Okomu oil and Presco. So government policies, government news can also help to drive a share price higher. Then sector events. Watch the sectors. Look at the one that happened recently. Oil subsidy was removed. We saw the impact on oil stocks. Almost all the stocks were eternal oil, MROS oil, corn oil. They were just spiking because of that. That is sector event for you. So we can have AI, artificial intelligence, robotics, healthcare like biotechnology, renewable electronic vehicles. You see how sector events can play out. My big question now is, should we follow all this? No, because you can't sit in front of your system trying to check, or in front of your TV, you're trying to check for new breaking news. That's why I said the media sometimes is noisy. So I just have to share this six catalyst to know. So all the stocks that I've shared with you that are top gainers, do your research. You will see that one or more of these catalysts is actually responsible for the big spike. So when you see that a share price is spiking, and then you go limit yourself to say, financial statement is saying they are losing, you are still a myopic trader. You're not a trader yet. You are, in short, you are an investor. You are an investor because stock price is futuristic. Look beyond that financials. I bet you would find one or more of this information that I've shared with you. So when you are too tight, you're too rigid to limit yourself to financial statement, and then you're seeing negative. I'm not saying financial statement is not good. It's okay. You need to check for the health of the company. Yes. But then when it comes to stock that will spike, these are the catalysts you need to pay a lot of attention to. I do this most of the times. Now, in Nigerian market, you may not even have access to this kind of information, but then there would always be a pattern that this stock will show before they move. I hope you're following. Then, why following media for breaking news doesn't work for me? Let me share that. I'm talking about media hype, big media hype. I also called this from my video course. I got from this particular slide. I also copied it from my video course. Why you should stop following media for breaking news. 6 deadly mistakes you should stop. Now make you to stop following the media. Number one, you will probably be following stale news. Stale news is like old news. When I say old news, it doesn't mean like it's 5, 10 years back. Stale news, 24 hours, 2 days, 3 days. Do you understand? Number two, which is where a lot of people lose money. You may be crowd trading. You know, many of us have come across the word crowdfunding. There is also a term called crowd trading. Crowd trading is when you are trading a stock at the same time with the crowd because there's a media hype. Crowd trading. Oh, the media just mentioned this stock. Let's go buy that stock. You may be crowd trading. I don't like it. Yes, it doesn't mean crowd trading is not good. You can crowd trade a stock and make money. Yes, people make money in crowd trading, but you need to be very careful. You need to be very careful because at that point, you may be buying high to sell higher, which is good. But then it's not a profitable strategy for me. It's not a sustainable strategy for me. Then media hype always come at the peak of the spike. Let's go back to some of our top gainers. Did the media tell you that Champs, MRS Oil, Transcorp Hotel, CWG, Japo, NFM was going to be top gainer for 2023? Did they tell you that? No. But now, this is what the media is going to shout. I bet you at the end of 2023, when you check financial news headlines, you will see first thing, top stock in 2023. And then you would most likely want to buy. A lot of people will even want to buy because they were top gainer for 2023. So media will not hype this stock before. They will hype it at the peak. They will hype at the peak of the rally. So I don't like following media. And then you would most likely buy high or at the top of the market. And this is not what trading is all about. Because in trading, you want to buy low and sell high. In trading, you want to buy low and sell high. But here, you're buying high, either to sell higher or to sell lower, because you're buying at the peak of the market. And then I also said it actually defeats the idea of one chart pattern, which is what my course is all about. I call it one chart pattern. Why did I call it one chart pattern? It's one single chart pattern that cuts across all the stocks that I've mentioned so far. That means when the stock shows you that simple chart pattern, you would know that something is about to happen. It reflects availability of one of these spiked, one of these information. So that means when I see this chart pattern, I know one or more of these are actually in place in that company. So meaning that I don't even need to start looking for the news, because I'm not an insider. I don't have access. It's this big firm manager that can easily put a call across to the CFO, CEO of the company. But then this particular a retail trader may not do that. They may not do that. So I call it the one chart pattern method. That means it's an edge. The edge institution, mutual manager, mutual fund managers have is that they have access to fundamentals. The edge you have as a retail trader is your one chart pattern, because I'm not an insider in that company, I can easily tell using this, because volume don't lie. This chart pattern tells me there is something playing out in this company. There's something playing out in this particular company. So that's why I said the idea is you defeat the idea of one chart pattern. And if you follow media, you are most likely a fundamentalist. You are, in short, you are most likely going to be a fundamentalist, because a fundamentalist would always be looking for, you are looking for breaking news, financials. So you are most likely a fundamentalist. Then, how then are you going to be a trader when trading is 90% technical and 10% fundamentals? Now, you might want to ask, fundamental and technical, which is better? Let me tell you the truth. None is better. I marry the two together. Fundamentals tells me what to buy. Technical tell me when to buy. So, and timing in the market matters. You can buy a good stock at the wrong time and you lose money. You can buy a bad stock at the right time and you make money. That's how funny Nigerian stock market is. In short, the stock market. That's the power of timing. You can buy a good stock. I'm talking about trader now. That's a trader. You can buy a good stock, good fundamentals, but the share price will be going down. Why? Because you bought at the wrong time. So in trading, timing matters. You don't want to buy when sellers are going to take over the market. You don't want to buy when buying volume will be weak. So you need to know at what stage in the market are we going to consider volume in this market or buyer strength weak? Because you need to know. For people that are following me, they will hear me talk about key level, key level, key level, key level. What is the significance of key level? I am telling you regions in the market where I know that there's higher probability that buyers will take over the market. And when buyers take over the market, the price will go up. I'm telling you key level because I'm looking at a region where I think sellers will take over the market and price will crash. These are not foolproof, but most of the times they've played out. So, like I said, this doesn't mean that fundamental analysis is bad. No. You can always watch. I have some of my course, like Millionaire Stock Trader, where I discuss how to trade, how to analyze stock for short term. If you are trading a stock for short term, the type of analysis you're going to carry out is not the same as long-term investor. You can't say, I want to trade this stock for short term, and then you are carrying the same research as someone who wants. It's not possible. There are few things you need to check to say this stock is okay, and then let me look at the demand side of the market. There are also things they are not the same. As a long-term investor, you're looking at the future cash flow. You're looking at discount rates. You are projecting earnings. You don't need that for trading. In trading, there are just few things you need to pay attention to, and that means you're okay. So, like I said, fundamental analysis requires you to carry out some short or brief summary, then move on to technical. The majority of the work in trading is technical analysis because your timing, you are buying for capital appreciation. And what is going to move the price of the stock? It is demand and supply. You are just one out of many people in the market. So when you buy a stock and you are thinking that the stock price will go up, nothing will happen. But when you do it at a time when everybody is also buying that stock, sentiment, then there's tendency that so that's why some people will buy a stock. The next thing, the stock price will crash. So we'll buy a stock and they'll say the stock has been stable. Why? Because they didn't carry out proper technical check. And technical check requires you to know whether people are thinking in your direction as far as the company is concerned. So those are the things you would most likely look at when it comes to technical analysis of a stock. Now, with what I've shared with you so far, I've shared a lot with you. I've shared top gainers with you, and I've shared what they all have in common. I've shared that's 2020 top gainer. I've shared all the stocks I've picked in previous years up to now, and I've also shown you how that they have in common, what they have in common. Then it means that our next stock for 2024 would also be stocks that are emerging from the bottom. It's a no new, you don't have to, it's a simple thing. What's your strategy to win the market every time is to always buy your stock from the bottom, especially stocks that are driven by catalysts. So imagine you picking a stock from the bottom and one of these 6 catalysts is present. Your confidence level is increased. When I picked PZ, I saw the whole trend. Inflation was trending higher, and PZ sells inelastic products, meaning that if they increase price, you don't have any option than to buy their product. And it was already reflecting in their financials. Earnings beat multiple times, and I spotted PZ from the bottom. When I spotted PZ crashed from 12 naira down to 9 naira. A lot of people were, I still bought more because my convictions was this stock is emerging from the bottom. That means he that is down fears no fall. Even if it's going to fall, it's not going to fall as it is before because the huge dump has happened. Look at PZ. So I always have that in my mind. Look at PZ. PZ has been falling since 2013. So the downside risk is very low, but upside potential is huge. And then I saw some catalysts behind it. So when it dumped, you can see here at the beginning of the year, when it dumped, I didn't bother. I was still averaging that I was buying because I was convinced. And I even told them recently that the first time PZ announced their exit from the market, I told them that the price PZ is offering was small, that PZ should be selling for not less than 23 naira before there was on news that shareholders has revolted that they were not going to accept the price. I said, my analysis is telling me that PZ should, I've already marked, if PZ was still going to be listed or traded, I've already marked my level that PZ should be selling as high as 27 naira in the market. This was when PZ was still selling at about 9 to 10 naira when I was doing this analysis. Because first, it was emerging from the bottom. He that is down fears no fall. You see that statement, I use it a lot in the stock market. So I want to pick the bottom pot. That's where you have all the ingredients. That's where you have the sweetest taste. So that analogy is what I use to trade the market. So if I'm going to pick my next stock in 2024, it has to be a bottom pot stock. That means it has to be a stock that is emerging from the bottom, going by the analysis I've shared with you. So don't jump on top gainer for this year. Get in early on the few ones that are emerging from the bottom. Corporate restructuring, news, sector events, government policy, financials, new product, new markets. These are the kind of stock that you should be buying to stay ahead, to be ahead of this. For me, I think it has always helped me to win the market every year. Your ability to buy stocks at the bottom of the market, and it's been driven by one of the 6 catalysts that I shared, which I coined from my books. Now, I said something in this particular webinar. I had to make it open, like I said, because I like to share knowledge. And people know in my knowledge community, my group, is a knowledge group. So I give preference to people that go for knowledge. I give huge preference to people that go for. Why? Because when you go for knowledge, the truth is you will know. When you know it for yourself. Nobody can take it away from you. The information that is out there about Nigerian stock is bad. It's negative. People are still living in 2008 market crashed when they should have dust off, move on, and find out what they did wrong. The US stock market has recovered from that crash long ago. But a lot of Nigerians are still in. If when you talk about stock, the next thing is stock is bad. I lost my money. So this is the reason I had to toil a model where I think my community will be more of a knowledge-driven group. That's why I'm investing a lot in my video course platform. I'll be launching more courses very soon. So I don't take people that go for knowledge for granted. So because of that, there are stocks that would likely be exclusive to people that go for knowledge. So because of this, I would share 3 stocks. When you go for knowledge, I'll give you access to all the 5 stocks. So this is what I'm going to do right here. These are the 3 stocks that I have for 2024. And let's talk about them. The remaining 2, I would make it exclusive for people that go for knowledge. Why am I doing this? I want people to learn. I'm not someone who wants to give you fish every time. I want to teach you how to fish. If I train you the business of stock market and you understand it, and you're able to train someone else, there's a ripple effect that comes with it. When people come to me and say, I want to invest in stock, how much are you going to, should I give you money? I don't take money. You can confirm from them from my group. I don't tell them, give me money. I've never for once told anybody, give me money. I'll give you something in return. In short, I will tell them, it's the first red sign for me, for someone who is coming for Ponzi. But one of the first ways, one of the first steps to master your finance today is to go for knowledge. You cannot be rich. You cannot be financially free if you don't have the knowledge to manage money. Financial freedom and financial intelligence, they go hand in hand. So here I am limiting the 2 to people that go for knowledge. So people that go for knowledge, I do that because I want people to go for knowledge. But then it's not a must. First one, Better Glass. You see Better Glass stock. I have recommended Better Glass from 30-something naira. My first entry into Better Glass stock was around 33 naira. And I recommended my community. We jumped into Better Glass and I sold Better Glass for 50-something naira. Better Glass stock is a stock you should watch out for in 2024. The financial of Better Glass are supporting my analysis. Better Glass stock, we're talking about renewable energy. We're talking about climate change, investing in climate change. You know, there are times where you buy bottled water, you dispose it off. Before now, when you buy glass drink, what do? You package it and return it back. They recycle it. But the advent of waste, plastic, is actually causing environmental pollution and all that. So I think the business of Better Glass would most likely be looked into. And the fundamentals of Better Glass support my take. If you go back to Better Glass analysis, let's see if I can check Better Glass Q3 earnings. If I can't find that, I'll go to Nigerian Stock Exchange market directly. So let's go to Nigerian stock markets to look at the financial performance of Better Glass. Like I said before, the first thing I want to check is to be sure the stock is emerging from the bottom. That's the first thing I'm checking. Then let's look at the financials of Better Glass. This is Better Glass on Nigerian Stock Exchange. I've recommended Better Glass before. In short, Better Glass sometimes we go on full beat. I like it. In short, many of the stocks that I'm buying now for 2024, they are sort of full offer. They're actually on full offer. They are ignored. When I spot a stock for the new year and I see them going on full offer, I am always excited because that's my discount period. That's the period I'm buying. It's like going to supermarket and they say it's Black Friday in the stock market. So that's what I'm doing. So let's look at the financials of Better Glass. This is the Q3 results of Better Glass. Okay, so let me expand. All right. So look at the revenue from contracts. Q3, 3 months, 15.5 billion compared to 15.7, a marginal decrease a little bit. Now, cost of sales reduced from 13.7 to 12. So that helped to push gross profits from 1.9 to 2.7, and then operating profit 1.3 to 1.7. Overall, 9-month period, 5.4 to 6, and then 45.3 to 38. Gross profit 9.8 from 7.8. And then if you come down to their profit and loss, you see from 875 in Q3 2022 to 1.2, and then that's 1.2 billion, 3.4 to 5.4. So financials from Better Glass Q1, Q2, and Q3 has been very impressive. In short, when I shared Better Glass with the community, my fair value estimate on Better Glass was around, I think around for the something or thereabouts. But I have to revise that estimate because of then they've not released Q3 results. So with the Q3 results, I would have to revise my fair value estimate on that stock. I post it in my community. So Better Glass is one stock you should watch out for. Then second stock I've been talking about is Cavatin. Now remember, the catalyst here would be one of these. Better Glass for me, financials, okay, which I think would also continue, and then knowing fully well that they are also benefiting from exports. Now, Cavatin is expanding to, remember, new products, new markets. There was a recent news about Cavatin buying helicopter and looking to expand to Cameroon. Look at it here. For 1 week ago, Cavatin can become Africa's aircraft maintenance hub. You can see here, 3 days ago, and there was time Cavatin acquires, look at it here, 2 weeks ago, Cavatin expands, acquires First Bear 429 for its Cameroon's operation. Remember the catalyst I shared? I said new products, new markets. New products, new markets. And then if you go to Cavatin charts, Cavatin is also emerging. Can you see the similarities? Cavatin has been down. I want to buy them from the bottom. Bottom part is where the money is, not at the top of the market. The money is at the bottom. So you can see how Cavatin has been beaten down. He that is down, fear no fall. And then look at where he found support. The same region as that of 2016. So it's gradually picking up. So this is a stock I am watching in 2024 because it's emerging from the bottom. My next winner will most likely come from the bottom. So I'm showing you stocks that are picking from the bottom, which I think will most likely be winner next year. And then I'm backing them up with catalysts. Now you might check the fundamentals and they will tell you, oh, please, catalysts. These are catalysts here. If it's not this, imagine at the end of the day, one of these would end up impacting on the company's financials. One of them will end up impacting on the company's financials. So watch out for Cavatin. Then my third one is Unilever. Unilever is going through what I call corporate restructuring. Corporate restructuring. Corporate restructuring, with Unilever selling some of its arm. Let's go to Unilever news. You can see one more. Unilever records 26% growth in turnover. With what is going on in Unilever, selling or season of operation on some of its segments, these guys are doing something internally. They are looking to create shareholders' value. They're looking to, you can see here, 1 month, Unilever stops sale of home care. For a company to stop the sale of certain products, I can tell you categorically that there must be something wrong with that segment that's making the company cannot just stop the sale of segment. You might look at it from outside and say, I thought healthcare is an essential product. There are things you may not know inside. You're not an insider. You're not an insider. So that corporate restructuring is geared towards providing value. So Unilever is also a stock, and if you look at it, it's emerging from the bottom. It's emerging from the bottom. You can see here, Unilever is down completely. Look at Unilever from a high of 64 naira in 2018. It has dipped to a low of 9 naira. It's selling for 14 naira. Look at how this stock has found bottom right here. And then I have a key level that I'm waiting for, which is 17. Unilever would most likely want to test 17 naira. In short, I marked a major breakout on Unilever on my weekly chart. I have a trend line. I call this counter trend line in technical analysis. You can see Unilever is looking to break that counter trend line to mean. So this trend line that is marked here is almost similar to Airtel. For those that bought Airtel, when I recommended Airtel at 1,400, look at it here. You can see this was why when I recommended Airtel in the group at 1,400. You can see Airtel is already 1,008. Airtel broke out from a counter trend line. It's a trend line that is against the overall trend. And whenever a stock break out of counter trend line in the US group, the guys in US group, in short, I post charts of US stock back to back and how every stock break out of counter trend line has been giving us massive return in the US markets. How we've been taking 15, 20%. Recently, I think on Friday, we took profit of over 20% on one stock, SLNO, and that stock broke out of counter trend line too in the market. This is stock, this is counter trend line here, and we took profit on this stock. So what am I saying in essence? When you buy a stock from the bottom of the market, you increase your chance of being among people that would profit from that stock, especially when one or more of these catalysts is present. So these are the stock I am giving out. I give preference to knowledge seekers. That is me. People that followed me will tell you this is how he does his own thing in the market. For people that want to go for knowledge to learn, I'm telling you the rest of the two stocks that are emerging from the bottom. One of them is going through massive corporate restructuring. Massive corporate restructuring, and it's a penny stock. It's a penny stock. The management is restructuring subsidiaries, and in short, the recent figures they have posted, almost 100% growth. And the second one, the same thing. They are all emerging from the bottom. I am giving that as a bonus for those that get the one chart pattern. I am a knowledge person. I don't give, when it comes to my community, I'll tell you, go for knowledge. If you join the group and you ask certain question, I'll tell you, you have not watched the course. Because I want people to know the reason people lost money in Nigerian stock market was because they were just jumping on one stock to another without knowing why. So you need to learn to master the business of stock. So what am I saying in essence? I'm saying that I am giving this one chart pattern off with 65%, and I'm using a coupon code 2024. So that means that anybody that wants to learn, get the full course, like I said, is for your own benefits. I'm trading the stock too. I'm not someone who is using costs to make money. No. Why? Because I've run a community, and my community have seen the result of what I post. If my stocks are not generating results, I'm not sure I would have run a stock group for 6 years. I'm not sure I will post any stock. At least I used one as an example, not a Nigerian Flammy. And you can go to the chat section to see what they are posting and all that. My one chart pattern, you can see here. This is the last course I would ever bring out in Nigerian market. In short, one good thing I like about one chart pattern is that it works for both Nigerian and US markets. In the US market, I've showed them back to back with different stocks, how that they show the same pattern. Even when we don't know what is happening inside, it helps you spot stocks that will spike. If you take that 65% off from the, it's giving you an average. I'm doing an average of 35 times 90. That means 31,500. So for 31,500, you are getting this one chart pattern course, and then I'm giving you access to the rest of the two stocks that I'm putting up. So I'm doing that for people that go for knowledge. Like I said before, I've done a lot. Normally, I would have restricted this to paid. If you look at all the information I've shared with you, it's something that qualified as a premium course that I ought to have sold out for people that want to buy into it, and there are people that will do that. But yeah, I want to let you see firsthand how I trade stock, and you've seen it. I don't trade stock as a gambler. I trade stock from the bottom of the market, and then I will exercise patience. That's how I trade stock. I trade from the bottom. So I am positioning myself right now ahead of 2024. So when this stock starts spiking, when it starts going up in 2024, we are already settled. We are already at the front seat in the party. Because when you get to the party early and you sit at the front, the food will get to you first before people at the back, the latecomer. So I am taking position in this stock right now, and I'm going to be patient. There is something I share with my community. I have an account where I buy the stock of the year and I don't sell them. Except there's a change. There's a change that will last everybody. So I have a dedicated account. Normally in our community, we maintain two accounts, one for trading, one for investing. You don't keep both together. So if you are joining us for the first time, my strong advice to you is if you maintain one stock trading account, please split it into two. Let one be for investment and let one be for trading. If you maintain one stock trading account and you're using both for trading and investing, you would not know whether you are doing well or not. Remember, the stock you might have bought for investment might be going down. And then they will be distorting the portfolio performance. And then you will think you're doing something wrong. So it's better you leave the ones that are for investment in one account so that you know this one is for investment. This one is to be paying me every year. Why this one is for trading? So if the one for trading is not doing well, you will then be able to know why is this portfolio not doing well? Because you know it's for trading. So I have another one which I used to track my stock for the year. So all these stocks that I've shared with you, and you can see they are all emerging with one of the catalysts that I've shared before. So if you are interested in getting the fourth and fifth one, because I want people, I think I do more, or I love people that go for knowledge. Because when you go for knowledge and you know, I'm always excited because you are more or less like a multiplier for me. How? When you go out there and you talk to people about stock, they are wondering, how did you learn this? Where did you get? And then you're able to say, oh, I learned it. A lot of people have referred people to my community because of the way I have taught them how to trade, which is different from what they know before. Some were not confident enough. Some it helped to review their, at least when they trade stock now, they trade with knowledge. They don't gamble. So I'm giving one chart pattern up for 48 hours, 65% off with 24. So if you go to coachocom, go to course and you add to cart and you apply a coupon code of 2024, 65% will be taken away from it. For people that have already subscribed for my private coaching, I do private coaching too. People that are for private coaching, they are getting this course for free. That what is you might ask, what's the difference between private coaching and your course? They are different. My private coaching is for people that want one-on-one, and I'll tell you what I do one-on-one. Here, this is what this platform here allows you to book a section with me. This is what I do private coaching. You can only book me 5 days ahead. So, for instance, now if I go to international stock trading and then look at today's date, is 3rd. It means you can only book me from 8. I do 5 days ahead because I might have something that I'm doing. It helps me to plan. So you can't just call me today and say you want to book me today or tomorrow. It has to be at least 5 days so that I can plan and you can also plan. And then if I also have other people too, you will help me know how to bring them to slot. So what I do in my coaching basically is that, number one, I review your portfolio. One of the mistakes I found out when I review people's portfolio is capital allocation. There was a man I reviewed his portfolio. He's not in Nigeria. His portfolio was down by 54%. I've not even recommended any stock. I've not even done anything. Just by asking him to review his capital allocation. What would be my capital allocation? One stock actually has 50. Imagine investing 50% of all the portfolio on just one stock. And then asking why. He said because he has a friend that worked with that company and the stock is down. This is wrong. One of the things I review when I restructure portfolio is how do you allocate your capital? Don't be attached. Don't be emotionally attached to a stock. Don't say because I work in or I have a cousin or I like this stock, then I want to. Don't give all the stock equal treatment because you do not know. You don't know the one that will perform. So one would simulated and assumed that he had allocated equal amount. A portfolio that was down by 44%, based on Excel simulation, immediately went up by 40-something percent. Just capital allocation. So sometimes the reason why you're losing in trading might just be that you are not allocating capital equally. So these are the things I do in my coaching, and then I will try to understand the person's investing lifestyle. We'll then have a section, whether it's in Nigerian market or US market, and then once I review, I'll then recommend, and then we'll move on. Like I said, those that have subscribed to my private coaching, they are getting this particular course for free. So that is it here. So for those that want it, this is it here. I'll also talk about how to join my community. Then I also want to announce and have an upcoming webinar. This is for US Stock Group here, for investor in US Stock Group. So here I'll be talking about how to pick great companies for dollar investment. As a Nigerian, you can't you need to start recognizing dollar as your primary currency. Sorry, apologies to the Naira loyalists, but here we have to be realistic. You need to start recognizing dollar as your primary currency right now, going forward, especially for investment. So that means you must have a dollar investment. Look into building dollar investments. And how to build dollar investment? By buying great companies in the US market. There are ways to check for great companies. I'm not saying good. I'm not saying better. I'm saying great. So how to pick great companies for investments. In the US market, there are just 1 to 2% company of all the company listed out of 500 that are considered great company. Means no matter what happens in the US market, no matter what happens in the economy, these ones, when they dump, they would rally back. I will be showing them sign. This one is for people in the stock group and it's free for everybody in the stock group. I host monthly webinars for everybody in the stock and US group. But for people that are not in the stock and US group, they will have to subscribe to join. So I'm announcing this for those that are in the group, and for those that want to join US stock group, we'll be having this next week Sunday. How to pick. This is how I host my webinars. And when I host webinars like this, they automatically become a course. Everything you see on this Coachocom platform, they were all webinar that turned to a course. So you see that sometimes you might have had, in short, almost everybody in my community have actually accessed all these courses you're seeing right here, because they were actually available on our previous platform. So this will be coming up next week, Sunday, for those that want to join US Stock Group. Like I said, I am not running a group to be saying buy stock A, buy stock B. When I tell them, I'm glad they are here. When I tell them to buy stock, I share detailed reason why. And it is in that reason that you learn. That's where the knowledge is. When I say we are buying Northern Nigerian flour mill, I will break my reasons down. And in that reasons, you're learning. So that tomorrow, when the stock goes up or comes down, you will know, okay, we sold this stock because it went down by this percentage. Okay, we made money because it's where knowledge is coming from. I am a knowledge-driven expert in the market. My recommendations are knowledge-driven. So I don't just dump buy stock A, stock B, stocks. No. That's why I don't dump stocks every day. It takes me hours to research on one stock because I know people are looking up to my recommendation. So I have to be very careful when I drop a stock. It's the kind of research I do. And I've done this for 6 years. So it helps to build my confidence level because consistency matters in this market. So for those that want to join our community, look at how it works. If you're not a member of the community, this is what I do. We do in our community. I have two communities. I have Nigerian stock market group, and then I have the US stock market group. Now, for the Nigerian stock market group, for those that join, you have access to video courses now. So we have a stock market for beginners 1 and 2. Now, some will tell me I've not invested in stock before. This is my first time. This is the course you need to watch. I did this specifically for beginner. If you don't know anything about stock, please do not invest. Do not buy any company. Don't invest your money in the stock market until you learn the business of stock trading. Go for knowledge. If you have 10 million to invest in stock, please keep your 10 million. Keep it in fixed deposit now. If it take you 3, 4, 5, 6 months to learn, because you will need the knowledge to manage that money. So that's why I have the stock market for beginners. In this stock market for beginners, I took people from ground zero with layman's explanation on how the stock market works. What actually happens? Tomorrow, by 10 a.m., the stock market will be open. Do you know what happens in the market every day? You need to know. You need to know what is going on in that market between 10 o'clock to 2:30. You need to know what happens in the market. The knowledge. You need to know the risk associated with stock trading. You need to know that's important. Dividends, those basic terms. That's why I have to take my time to do this knowledge. You can see here, it's just 1 hour, 15 minutes. And then I have stock market for beginners part 2, which is 1 hour, 22 minutes. So if you learn the business of stock market by watching the first, as you set yourself up, now you are ready. You need to cook yourself. So if you don't have knowledge about stock market, if nobody has taught you before, or maybe you've been hearing, this is the time to learn the basic. So know what happens. And then when you join the community, it becomes easier. Because then you can then ask questions. So that's what I share with people. Then you have access to our chat app. Like I said, we are waiting for the iOS version. Now, if you go to Google and type Glofolio, this is the mobile app. Like I said before, This is it here. So why I've not been promoting it here is because I'm waiting for iOS. So we don't want the iOS guys to be left behind. That's why I had to just tone down. We are still active on WhatsApp. We are still active on the web. Although the app is also active. For people that are using Android, they are also able to access all my latest stock recommendation because of the guys that are using iOS. So the web. Now, these are our previous websites. I will teach you stocks.com. This was the name I started with before we changed the name to Glofolio. If you go to Stock Picks, you can see these are all the stock recommendations that I've been sharing. You can see them right here. Like here now, you can see top diversified sector stocks to buy as NNPC sells petrol for. This was when NNPC reviewed their fuel price. You can see I quickly thought about it. This company has 70 million plus lifetime customers with 20% growth rate. This consumer goods stock may lead gains again if inflation surges. You can see these are recommendations I've been posting in the community back to back. So it's because of the guys on iOS that I'm still maintaining this platform. You can see this undervalued growth stock may surge by 30%. One profitable insurance stock you should buy right now. So when you join our community, these are the stocks, access to stock recommendation, access to a community. And then, like I said, the third one, you will see all my research stock recommendation for trading and investing. And then you also have access to our monthly webinar. I host webinar every month. Yes, I do that every month where we review all the stocks that are recommended, and then I'll share the state of the market. If there's any new information about the market or anything you need to know. And again, every webinar comes with knowledge, new knowledge. I make sure I share new insights about the market. I share new knowledge. There must be something new. Like one of the webinars was how to value Nigerian stock. Here, you can actually value Nigerian stocks. Like calculate the fair value of a stock. What should the stock be selling for? And then compare that fair value with what is selling in the market. This was the course I used for it. We had this was the webinar, and then you can see here, we calculated the fair value. What I did here was that we separated all the stocks that posted impressive performance in the market. I exported all the stocks to Excel. That means the ones that posted good results. We exported them to Excel, and then we apply our discount rates, risk adjusted, based on the US 10, the Nigerian 10-year yield. And then we're able to uncover the fair value of some stocks. And then if you go through this video course, you will see that most of the stocks I talk about in this video course, their share price have actually rallied to that extent. So it's good for you to calculate the fair value. Fair value of a stock means what is the actual worth of a stock. It's like me going to the supermarket and I want to buy an item, and I know this item should be selling for 10,000 naira from what I know. And the supermarket is telling you that you can pick it for 5,000 naira. That's a huge discount for 10,000 naira. So here, I'm teaching you how to calculate the fair value of a stock. So all these videos, they are actually the result of the monthly webinars that we've had. And then ultimately, you can actually connect and network with other traders and investors like you. One good thing I like about my community is that at least I'm glad I'm providing a platform where people can meet and connect. You can be in the same region. There are people in our community that are not even in Nigeria. But through my platform, they've been able to connect with themselves over there in diaspora. Some are in the UK, some are in the US. So that's the advantage of joining a community like this, especially a knowledge-driven community, not a Ponzi. That's why I push people. If you know me, they will tell you he's a knowledge person. He will force you to buy his course because he wants you to learn. So, and then for people that are interested, this is a call to action here. This is the cost for joining our community. I have the details here, and this is my number, which you can send to me via WhatsApp. Please, please, and please, I don't have another number that I used to run a WhatsApp group. This is the only number I use. Once you pay, share your payment proof with me via WhatsApp. Don't worry. I will share a link to fill a Google Sheet once I confirm your payments. I will share a link to fill a Google Sheet once I confirm your payment. And then once you fill it, I'll send a mail with a link to join the community and how to get started. So if you are interested in joining our community for Nigerian stock, this is it. You have every details. You can probably take a screenshot and then you have my WhatsApp. Now, for those that want to join the US market, sorry, this is supposed to be the US stock group. Those that want to join the US stock group, there are members that are in both groups. US market and Nigerian market. Look at it. You have access to my video courses on how to trade US ETFs and also crude oil. That's an advantage. How to trade US stock and crude oil. Now, you might wonder, do you guys trade crude oil? We actually trade crude oil. We invest in crude oil besides. And then you can actually make money from crude oil when the market is up and down. But right now, we are bullish on crude oil markets. So we have an ETF that lets you profit from crude oil, whether it goes up or down. And it's not like the way they trade Forex. No. You will invest in that ETF and leave it as long as you know that crude oil will rally higher. OPEC just concluded a meeting and they're looking to cut production quota, which is bullish for crude oil. Crude oil had been going down recently because of the build-up on US inventory. I shared detailed information on how to invest in crude oil and the factors that drive crude oil. So when you hear crude oil, and then they tell you can invest in crude oil, in your head, you'll be thinking, I need to buy a big barrel, I need to be a billionaire. Or no, you can actually profit from the crude oil market as a retail investor. There are instruments that can help you gain exposure to crude oil. Anybody can trade crude oil markets by getting exposure to that instrument. So that's another way to diversify your portfolio. If you know, and then here I share the factors that are actually responsible for both the up and down moves in crude oil market. But currently, I am bullish on crude oil. So I'm buying the ETF to hold because I know crude oil will most likely go up. And then the same thing, you have access to our chat community, like I said before. Now, the Glofolio app has a chat group in it. The same way you have a WhatsApp group, it has a chat group in it. That means you can reply messages, you can respond. But why we have not fully moved to that app is because of the iOS version. That's why I'm being patient. I don't want to leave the iOS guys behind. So the app is active for Android users, but I have been limiting my participation until that iOS. Because if I go fully on the app, then the iOS user may be limited and they might feel that I'm leaving them behind. I don't want to do that. That's why I'm doing everything to ensure that the iOS, once the iOS is available, all my discussion, everything will be on the mobile app. And why I like the mobile app is that it gives me access to unlimited growth. I can scale because there are a lot of things I want to do on the app. Now you were able to see all my researched US stock recommendations for trading. Recently, we'll be closing positive trend in the US market. US market is picking up for multiple reasons. So I do the research, I post in the group. In short, what I do in the group is that I don't just say go and buy the stock. I tell them the stock to watch ahead, and then we'll mark areas that we're going to enter. So once the stock breaks out from that area, we quickly enter the market. So that's what I do in the US market. And then you also have access to my technical analysis chart. In the US market, because the market is busy, in US market, we have over 10,000 companies. So there's always something to talk about in the US market. I post charts of stocks, and then in between, you learn. And then same thing, you also connect with others in the US markets, investors like you. And then the same payment details. So please, if you pay for Nigeria or US markets or both, kindly indicate in your chat section via WhatsApp. If it's Nigeria, you say for Nigerian stock group. If it's US, it's for US stock group. So I think I want to give room for question, and then I'm going to end this video recording and give room for question. I want to answer as many questions as I can right now. For those that might have questions to ask, you are free to ask questions. And if you want to raise your hand, I'm willing to unmute you right now. So let me stop the video recording, then we'll go ahead with that.